All right, good evening, everyone. Get started for today's session, yeah? Okay, so for those of you who are first time and pretty new to what we do over here, every Monday, okay, we actually come online and share with you some of the opportunities available in the market. And of course, after that, okay, so the first part of it, I'll share with you what are some opportunities I've been looking out for this week, what are some things you need to take note of, and then after that, the remaining time we'll open up for Q&A. Okay, for you to actually ask questions regards to trading and investing, and if you'd like to find out a little bit more about maybe some of my opinion with regards to some of the asset or instruments, okay, you'll be able to do that as well. Okay, yeah. So let's get started for this session over here. Okay, so first up, I think it's pretty much important that you need to know what are some of the risk events that's happening in the financial market. Okay, from the FX side, of course, and the stock side as well. Okay, so FX side over here, I think the key event that you want to pay very close attention to is none other than our FOMC statement, and of course the FOMC press conference that's happening this week. Okay, so depending on where you are, for me, my time zone here is happening on Thursday, okay, midnight. Okay, so you definitely need to keep track of this, and to understand what is the forward guidance from the Fed itself, because that would then affect not only the US dollar, but it will then affect the entire financial market, especially the stock side as well. Okay, so over here, what you want to probably keep track of in the upcoming FOMC statement is what the Fed forward guidance is, right? So as of today, based on last month's latest report, we are still expecting the rate hike to start somewhere in 2023, and we are expecting 2 rate hike in 2023, and there's no cut or there's no sign of tapering as of right now. Okay, so what you want to take note of is that with this coming statement, right, when it's being released, is there any changes to this expectation, right? Will there be more rate hike in 2023 more than 2 times? That will be hawkish for the dollar. Okay, or will they bring forward the tightening process maybe by end of 2022? People are starting to expect a rate hike already. Okay, that will be bullish as well. Okay, or if the Fed kind of hints that they are reducing their asset purchase program, which is right now they are doing 120 billion per month. If let's say they start to reduce it to maybe 100 or even 80 billion per month, okay, that is also going to be hawkish for the US dollar. Okay, so you definitely need to keep an eye on that, because that would be the major mover for the US as well as the stock side of things. Okay, and if today you're trading the stock market, this week is crazy of earnings. Okay, every day you have some big companies earnings being released as well, right? So if you're trading the stock market, you definitely need to keep an eye on all this earnings release. Okay, so yep, this week is definitely gonna be a major one. Okay, not only from the currency market and FOMC, but for the stock side of things, pretty much quite active too, right, with all the earnings that's coming in. Yeah, so do take note of that. Now, having said that, it's important to understand the fundamental side of things, the major mover that can potentially cause the price to move. However, you do not want to just base your trading decision on such event, right? So for me, I'm looking a lot on the technical side of things, right? So that's where most of our work in terms of analysis and forecasting comes from the technical chart. Okay, so over here, if you take a look at the DXY, right, what we are seeing is from a 4-hour time frame perspective, there's a good chance that we are seeing the dollar weakening. Okay, of course, this is just purely based on tech, which means that you still need a potential catalyst to push this down. Okay, and having FOMC coming up, that will be a pretty decent catalyst that can push price towards the downside as well, right? So of course, if the Fed is gonna continue to play down inflation, gonna continue to say that it's transitory, there's nothing much to worry about, we're still not looking to taper, we're still continuing the 120 billion per month asset purchase program, that might then cause the dollar to weaken, okay? Because fundamentally that means that more dollar is going to be printed continuously, and supply and demand, that will push price down, okay? So do take note of that. Not saying that the dollar is definitely going to drop with this upcoming FOMC, but I would personally be focused more on the downside. Okay, in other words, if this were to consolidate like that all the way until before the FOMC statement is being released, then one way to get involved in the dollar trade, of course, is can you look for the breakout of this entire piece of structure, and then from there, you might get a very solid trade to the downside. Okay, and if you're looking at dollar index, then the level to keep an eye on is somewhere around $91.50. Okay, of course, if you don't trade the dollar index directly, then you want to keep an eye on euro dollar. Okay, pretty much the inverse of it. And same thing, right? You do see this structure here very, very slow as it's coming down. So again, suggests there's a good chance that this will bounce back to the upside. And the target here for now, in terms of euro dollar, will be at this high, around 1.1975. Okay. So same thing, what I'll be looking out for, of course, you need to have your execution strategy. For me, I will be waiting all the way until maybe closer towards FOMC. If let's say by then, this chart here is still basically doing its consolidation like that, then I'll be looking for a potential breakout trade to the upside, riding on the news event from FOMC itself. Okay, so I think this is definitely a pair you want to keep an eye on, because we have not only the technical that is super clear in the pattern itself, but we are seeing there's a catalyst coming, okay, which is our FOMC. Okay, so definitely pay attention to the dollar for this week. Okay, the other one here is GBP USD. Okay, of course this was done in the morning. You can see price is moving. Okay, but today's Monday, right? Most of the time Monday, the market is just going to chop around. So be cautious of that, okay? When you're executing trade on Monday, just be very careful. Pound dollar over here, okay, what we are looking out for is a potential correction, or say consolidation, and if that happens, same thing, maybe closer towards FOMC, that would be a potential nice breakout trade to the upside. Okay, so the condition for pound dollar, if you were to look at it, right, is you want this to do a sideways correction. Okay, if let's say pound dollar were to do something like that, okay, and before FOMC, then there's a good chance that this can come back down first, right? So for me to be considering the buy trade, okay, I need to see a pattern that looks something like that. Okay, if I were to bring this here, I need to see something like that, right? So this is a valid correction for me to take this trade to the upside. However, if this is not the case, and let's say something like that over here happened, okay, so see this, right? Patterns, okay. If something like that happened, then I'll be very, very cautious, because then that suggests that this can then come back down here. Okay, so I think for today, it's very difficult to say which is likely going to develop. You need to give it maybe another 2 days, and on maybe late Wednesday, you'll be able to see what pattern exactly is developing. Okay, but nonetheless, pound dollar I think is worthwhile to be considering, because if today you are able to get a buy trade on pound dollar, we might get a decent move all the way back up towards this previous high here. Okay, so from this scale, you can see we have this double bottom kind of formation, and we do have this topping formation over here. So if this were to go, then there's a good chance it will come back all the way towards this high, and we are essentially in a type huge consolidation phase. Okay, so that's the opportunity on pound dollar for this week. Okay, good to take note of, because we are basically close to the bottom of it, right? Bottom of the range. So if it starts going up, the opportunity is definitely there. Okay, the other one that you want to keep an eye on, pretty much similar to pound, is Kiwi dollar. Okay, so if you look at this scale over here, same thing, right? It has came down, but it's coming down very, very slow, and it has broken this lows, but it's not going very fast, right? It broke and then it bounced back up. It broke and then it bounced back up. Same thing, it broke here and then it bounced back up. So basically, we call this kind of V-shapes, right? V-shapes. Okay, so right now pretty similar to pound dollar. If this were to form a consolidation like that, then we have a decent trade to the upside as well. Okay, or if let's say this were to go up here and then it starts to form a small decent flag here, this is also a decent trade to take it to the upside. Okay, now on a higher time frame, this is how the Kiwi dollar is looking at. Very clear structure. Okay, again, we are trading off the patterns that's recurring. So you can see this bottom formation here. Okay, so if this were to reject to the upside, you have a good decent room all the way back towards 0.7315. Okay, so Kiwi dollar pretty much also riding on the dollar weakness. Yeah, so we have a couple of dollar pairs that I'm looking up for. The other one is on dollar CAD. Okay, so dollar CAD over here, if I go down to the 4-hour time frame, this is where I'm looking for that short-term sell, okay, something like that, because we have this push, we have this V shape. So as of now, we are expecting more downside. Okay, yeah, okay, that's pretty clear, right? Impulse sideways move, you expect more downside. Potential target is somewhere at this low, around 1.2250. Okay, same thing, we are riding on the weakness of the dollar. Very likely, you know, it's just gonna perhaps consolidate all the way until FOMC, and nearer towards FOMC, maybe late Wednesday. If you still see a correction like that, then you have a good chance for this trade to continue lower. Okay, now a lot of all these major pairs, as I'm sharing, you realize that we are focusing on the downside because the dollar index is showing weakness, right? But it's not gonna be like foolproof, right? Because the Fed during the FOMC can be very hawkish, and basically the dollar just strengthened, right? And if that case, then none of this trade you want to get involved in it. Okay, the other one is on dollar franc. Okay, so dollar franc over here, what I'm seeing on a 4-hour time frame is more of like a potential mini head and shoulder pattern that looks something like that. And of course, then the direction here that we want to keep an eye on is a potential downside. However, okay, one thing to be cautious of when you're looking at dollar franc is you want to pay very close attention to this low here, around 9115, because it can easily just come back down, then form this double bottom and then push back to the upside, right? That is possible. Okay, so this trade here, if you're looking to take a sell because of this here, very clear, one impulse and then a correction push, you're definitely looking for the sell right now, but be very cautious of this 9115 level, because it can easily come back here, form another V, and then from there it keeps going back up. Okay, so take note of that. Of course, the possibility is what we are looking for a sell is more of like this will break through, do a small consolidation here, and just continue falling. Okay, so same thing here. We are looking out for the dollar weakness. Okay, yeah. The other one is on CAD Yen. Okay, this chart is pretty clear as well. You can see V shapes, and then right now it's doing its consolidation, right? So this one on this scale, we are looking at the upside. Okay, pretty clear. On the daily time frame, right, you can see this double bottom formation here as well. Okay, on the daily scale. So if this trade were to take it to the upside, we'll definitely look at this previous high. Okay, the level is around 91.2. Okay, so that's the huge upside potential that we can capitalize on. So on the 4-hour scale, what you want to do is, of course, wait for the correction. Again, all of us has different technique to get involved in the trade. You can wait for the retracement, you can wait for the breakout, you can wait for candlestick formation, you can use some Fibonacci here to give you some guidance. Many ways, right? Some of you might even use like MACD, turn bullish. Some of you might use the moving average, right? 2 MA, you know, wait for it to come back and correct on the MA and then bounce off the MA plus a candlestick. There are many ways, okay? So we won't go and discuss, you know, every individual technique because it will just take a lot of time. Okay? So over here is more of like sharing you the opportunity for this week. Okay, you want to focus on this pair here for the upside. Okay, and then of course you need to have your strategy to get involved in that trade. Okay, so CAD Yen is definitely one pair you want to put it into your watch list for the week. The other one that we can potentially look up for is Kiwi CAD. Okay, so over here as well, you can see Kiwi CAD pretty much similar to dollar CAD. You have this V shapes that form, and then after that, right now is doing its consolidation. So you are expecting that short-term move to the downside as well. Okay, so Kiwi Cat, one thing you want to keep an eye on is on a higher time frame, because it has in fact, okay, came back to this level here a couple of times. So if this trade here you are taking it, then you might want to just take your profit off this level. There's a good chance this can then bounce back up. Okay, so keep an eye on that. Again, you want to manage your total risk exposure, right? If today you're trading on selected pairs that has, let's say for example, Canadian involved in it, dollar cat and then Kiwi cat, and both of this pair here you're looking at the same direction, then naturally you want to be aware of your total risk exposure, because if something happened to cat and it move against your direction, then if you take both, then very good chance you might lose both trades at the same time. Okay, so you want to do some adjustment accordingly, right? Either you filter off, select only one pair to trade, or you just reduce your lot size. Okay, so that's something you want to keep an eye on, right? And of course you apply this also on all the dollar pairs. Okay, so Kiwi Cat, you want to keep an eye on it. Pound Franc is pretty much similar to the Cat Yen setup, the Pound Dollar setup as well. So we are seeing this kind of V shape, then a sideways move, which short term tells us there's a good chance this can continue to the upside, right? In this case here, our target is around 1.2858, right, or 1.2860. Okay, on the daily scale of Pound Franc, okay, what you want to see is why we are taking this up here is short term. Okay, basically we are seeing this as an impulse sideways move, and then this can come back down one more time. But for now, we are taking this as a short-term trade to the upside, because we are seeing this as a potential expanding flat, right? So this is your first move down, 1, 2, 3. This can develop into expanding, and then this can come back down. Perhaps that will then form the bigger move, and then from there it can continue higher. Okay, but these are a couple of steps ahead. For this week here, we just focus on this piece. Okay, so if you're interested, you can put Pound Franc into your watch list as well. There's a good chance from this consolidation, then we'll take this trade to the upside. Okay, so that's on some of the FX side of things, right? You realize that most of the opportunity actually comes from dollar. Okay, that's because we do have a catalyst coming in for FOMC. Okay, in terms of commodities over here, I would say gold is probably showing a potential sign of bullishness. If you still recall, a couple of weeks back we talked about, if you see this move here on gold, there's a good chance this will continue up, right? And we talk about why, since I think sometime back here you do not want to touch gold, it's probably gonna just go consolidation. Okay, that's the reason. And of course back then, hopefully none of you actually bought in gold at this period, okay, where we talk about this does not seem very impulsively. Okay, so you want to be at least waiting for this, right? And as of today, this seems a little bit clear, right? It's like exactly what we wanted, what we've talked about. This is more like a flag, so there's a good chance gold can continue higher from here. Okay, so if I bring you to the higher time frame, where is the potential, or how far can gold hit? I would say, if you take a look at this, if let's say this is how we do it for now, right? Let's say this is the bottom, okay, and this is basically how it looks like. Okay, if I were to just do this, right? So let's say this is done, right? There's a good chance, right? Of course, primary, you want to put this here as your first target, and then the second one is going to be here. And if you're someone who is looking from long-term macro fundamental, you probably want to keep gold without any take profit. Okay, basically you want to ride it as far as it can go. Okay, and you just manage that trade accordingly. But you might want to take partial profits if you're looking to buy, right? You want to take partial profits off this high, and of course this high here, and then you can let the remaining trade just run. Okay, so yeah, the two key levels you want to keep an eye on is this one here is around 1915. Okay, this one here is around 2075. Now I'm not saying that you just buy it now. Okay, you need to have a strategy to get involved in trades. You need to know where you want to put your stops and things like that. I would say for now, this structure here looks pretty clean. Okay, at least for now, right? But things are going to develop and might change nearer towards FOMC, right? So same thing, if you're looking at gold, right, I would suggest you might want to be patient until closer towards FOMC as well, right? Same as those dollar pairs here, because again, it's just probably gonna be what we call ding dong, right? Just up and down, not going anywhere all the way until FOMC, and then it pops, right? So you do not want to get involved before it pops. You want to get involved just before it pops, right? And that's the idea of how we look at trades, okay? So yeah, okay, as long as I think this continue to consolidate in this pattern here, okay, that means something like that, and then when FOMC is about to come, you can of course then look to break out, to take a breakout trade, you know, somewhere at this high, and if price were to break out, that would be a very good trade, right? And you want it to just keep going. Okay, yeah. So gold, definitely, you can start paying attention to it. We talk about Bitcoin and crypto, right? I'm not sure how many of you actually caught that move to the upside, where we say, you know, you want to be patient, don't touch it, but when the time comes, that's where you want to look at it. Okay, so gold right now is a good time to come back and start looking at it. Okay, yeah. Silver, you probably do not want to touch this first because it seems like silver is not showing sign for the upside, but it's the opposite. Okay, which some of you might start to be confused and say that, hey, but if gold is going up, shouldn't silver also go up? Not necessary, okay, because they are to a certain extent independent asset, right? Gold is gold, silver is silver, but they have some kind of correlation. They have a good relationship, but they do not need to be always moving in the same direction. So silver now seems to be a little bit showing more sign that this can still drop. Okay, so if you're looking at silver, then you probably would not want to buy it yet. But if you're looking to buy up the precious metal commodities, then gold would be a more, I would say, a better and a clearer options compared to silver, because silver charts still seems like it can come a little bit lower first. Okay, so probably you do not want to touch silver yet. Crude oil, you know, with this bounce recently, on the daily time frame, you can see that's the V shape, right? So if I were to clean up a little bit of all this here, probably, you know, I'll leave that there. This one here, okay, you can see this is bouncing off something like this. There's a good chance that oil can potentially continue higher. Again, you know, a lot of all this trade, you realize we are looking at dollar weakness, right? Okay, gold going up, the weakness of dollar can push it. Okay, oil going up, the weakness of dollar can also push it up. Okay, so yeah, we are looking at this here. The chart suggests that if this do a consolidation, then likely will continue upwards. Okay, I personally don't trade oil, right? But just to share with you commodity side of things. Okay, now in terms of the stock market, okay, again all-time high. Okay, hope this drop here, none of you actually panic and sell. We talk about that. I'm really not sure which sharing session we talk about it, but you know, I recall we talk about that. You know, every time you see a drop in the stock market, you want to put that into perspective. Okay, some of you heard it before. Just take it as a reminder again. If the market just dropped about 3%, it's not a crash, right? Don't panic. It's a very healthy correction, and based on the macro model that we got over here. Okay, everything is still pretty much liquid, which means that the market is still being supported to the upside. Right? However, this upcoming FOMC is where you want to take note of, because if let's say the Fed starts to do or signal sign that it's gonna do its tapering process soon, okay? So tapering is either gonna be increasing the rates way earlier, or if they're gonna reduce their asset purchase program. Okay, either of this probably gonna send the stock market down. Okay, now how deep that's gonna be depends on the pace of their tightening. Okay, if there's a huge major surprise and say that, oh, you know, we're gonna cut entirely, that means we're gonna stop the entire asset purchase suddenly, unlikely, but maybe it might. Okay, the chance of it is very low, but if they do it, it's gonna be a major surprise. The stock market might tank. Okay, so keep an eye on that. Again, a lot of all these things that we talk about hinges on this coming FOMC. Yeah, so I would say for the stock market, perhaps if you're looking at trading the indices, you want to be very, very careful for this week. Okay, FOMC is gonna be the major killer as well. Okay. Yeah, so same thing in the Europe side of things. Just be careful, right? So when we talk about US, Europe, they're more or less the same. Okay, Asia market, China, okay, today it just had another crash. Okay, now what's a crash? Okay, this is what I call, I wouldn't say a crash, right? But a drop of 20% or 25%, okay, it's something that's worrying. Okay, a 2%, 3% drop, even a 5% drop is still okay, common. Okay? But a 20% or 25% drop in the market, you definitely want to be very, very cautious on that already. Okay, so China market or even Hong Kong market, okay, getting pulled back because of China as well. Just be very careful of it right now. I don't think it's a good time to buy it. There's no need for you to catch a falling knife. Okay, yeah. So just don't touch this now if you're interested in Asia. Okay, just stay out of it. Great. Okay, so Bitcoin had kind of like a mini gap, and the momentum seems to be pushing higher. All thanks to Elon Musk, Katie Wood. Yeah, basically right now they do have some effect on the market. So if you're looking at crypto, you want to be very cautious of this level. I think we talked about this before as well, around 41,000. Yeah, so as price is heading higher towards 41,000, you want to keep track of how it's gonna reach there, because the idea here is that if it's gonna go up towards 41 very slow, yeah, there's a good chance this will just rebound, right? Come back down. If let's say it breaks through 41 very, very strongly, something like that, okay, then there's a good chance that Bitcoin is finally bullish. Okay, so definitely keep an eye on it. I think by the end of this week, you'll probably get some better understanding, or I would say better clue as to what it's likely gonna do. Okay, so same thing for the crypto market. Ethereum is also breaking out. So Ethereum, if you're interested in it, wait for this consolidation. Then you can look for a next move back towards trend 2,900 level, okay, which is this high here. So yeah, the crypto market is looking pretty neat as well for now. Right, so definitely you want to keep an start. Again, for those of you who are interested in crypto, just remember, like 2 weeks back we talked about don't touch it, just be patient. Now is your opportunity to focus on it. Okay, so there are times where you just don't want to touch it, and then there are times that you want to come back and get it. Okay, so right now, gold is a good time to keep an eye on it. Crypto is definitely a good time to keep an eye on it as well. Okay, yeah. Great. So that's what I have prepared for this week. Okay, those are some of the opportunities. So those are some of the things you want to keep an eye on for this week itself. Yeah. So hope that's clear. So what we'll do right now is let's see if you guys have any questions you'd like to clarify, and I'll do my best to see if I can answer some of your questions over here. Okay, yeah. Good. Okay, so if you have questions, you can just actually put it into the chat box. Then I'll be able to look at them and answer you accordingly. Okay, so I see over here. What's my take on the Doku, SEA, and Shopify? Yeah, they are not in my watch list now. Yeah, so these three I would say pretty popular stocks. But not in my watch list, right? So I'll probably not touch them for me. Okay. I see Kit here asks Euro dollar. We talk about it, right? So probably we won't repeat that. We talk about it at the start. If you miss it, you probably can watch the replay after that. I see here Daimi asking, can you explain about gap? What is the story? Now I'll tell you that generally when you see a gap in the market, there are two ways to look at it. One is, of course, in terms of stock market. Okay, sometimes you see gaps in the stock market, right? For example, like this is Procter and Gamble, P&G. You do see gaps over here, right? Some gaps over here. why? Because the stock market is not 24 hours, right? The stock market operates, in the US, then it will be in the US time zone. Um, like how we work, okay? Working hours, right? It's not 24 hours. So the idea is you have like the closing of the day and then you have the opening of the next day, and therefore there will be a gap because if today it closed at a certain price and tomorrow it open at a different price, then that's where the gap happens, right? That's where you see gaps in the stock market. Now, sometimes you do see gaps as well in your FX pair or maybe commodities, or like in this case here, crypto side of things as well, where they are 24 hours, but how come there's a gap? You can explain it by liquidity crunch, okay? In a certain way where something actually happened where suddenly there's an influx of orders coming into the market, and there is a lack of, let's say, supply, right? So if suddenly a lot of people wants to buy it and there's a lack of supply, lack of liquidity, then market will be gapping, right? Because what will happen is that it will find the next best price to fill in the buyers, right? And that's where the market just skip a bit and it jumps higher, okay? So that's how you can view and understand gap. Okay, one is really because the market is closed and it opens off at a different price. The other is because there's a lack of liquidity, right? We call it a liquidity crunch, and what the market does is it's just basically finding the next best price to fill the order and the demand in the market, all right? And then what it happens is it just gaps out. Okay, so that's the explanation of that. Okay, good. I'm seeing here. Ng is asking about pound yen. Pound yen. Pound yen, I would say generally the momentum seems to be bullish, but on a 4-hour scale, you might want to be careful because this looks like it's lacking momentum. Okay, it's probably starting to show some sign of divergence as well, so you might want to be a little bit cautious in the buy. But the momentum is definitely there, right? Because you can see follow through from last week, the momentum is to the upside, right? But the question is more of like, you might want to be patient and wait for confirmation before you look to take the buy trade. Okay, but the momentum is pretty clear, right? It's pushing to the upside. Okay, so you might want to focus on that. BTC. Randy here says BTC looking to sell it at 12,000. I'm not sure what you mean. BTC price is not within that range. Okay, maybe there's a typo. Okay, Chia asked about Pound Australia. Now, Pound Australia is a pair that right now it seems like it's pushing up, right? So I would say you want to be giving it time. Okay, that's why you realize that I'm not looking at it for now, because with this 4-hour push, it seems like it can push higher, but at the same time it can easily do a V, right? So right now it's not a good place for me to go and focus on this too much. Okay, so I would say just stay out of it right now, or even I would say this week, right? Probably just give it time, leave it aside, come back next week, see how it develops, right? But yeah, I don't think it's a good time now to even buy, or I don't think it's a good time now to even talk about sell. Okay, so it's basically what we call leave it alone, don't touch it. Okay. Randy asked about KLSE, huh? The Malaysia market. Yeah. Again, I wouldn't suggest you to touch it. Emerging markets right now, the money is definitely flowing out of it. Okay. Money is going back to the US, right? And again, you just compare when one market is all-time high, the other market is not even recovering. It tells a lot about it, right? Okay, so in terms of Malaysia market, we did complete this 3-wave push. Okay, if I were to put it like that, right? We did complete that, but this is not a bounce that we want to see. We want to ideally see a V shape. It's not doing that, which means that this can easily just do a correction and continue lower. Yeah. Okay. As of now, there's no sign that it's bouncing yet. Okay. So generally, the entire market in Malaysia, I think, probably there's even a good chance this will continue lower. Maybe a good somewhere around 1470. Okay. I'm not surprised if it continues lower towards 1470. Okay, somewhere down here. Yeah. So I don't think it's a good time to buy. Okay, for me, if you have an option, right, you can choose between the US market and Malaysia market, or even let's say US market, Singapore market, or US market versus China market. Just stick to the US market. Okay, that's where the money is flowing in right now, right? You can see just from the chart itself. Okay, so KLSC, I think right now, if you want to look at it, there's still a good chance this can continue lower, and then maybe from here, you might start to see some sign of reaction to the upside. Okay, but hard to say, right? We need to see how price comes back down first. Okay, so generally, overall, the momentum seems to be still to the downside. Okay, great. Good. Okay, Aussie franc. Let's take a look at that. Okay, Aussie franc, I would say short-term wise, there are a few ways that this can potentially develop, right? Either this is gonna be like a crawl, and therefore this would likely just be consolidating something like that, and then only pops. Okay, that is one scenario for Aussie franc. So if that's the case, then you're probably only gonna see some tiny movement around this range. The other way that this can develop, of course, is unlikely but still possible, is this would probably form something like that, okay, and inverse head and shoulder, okay, or this can easily just comes back down to form something like that, then from here it pops. Okay, so there's definitely quite a bit of scenario right now that can potentially happen because we are right now here, right, and this ease that is developed does not give me sufficient information to tell you or even share with you what's likely gonna happen. Okay, there are so many ways it can develop right now. So yeah, I mean, if you're looking to trade it, then you want to go like maybe intraday, then that might fit, right? Maybe 30-minute, 15-minute, look to capture 30, 20 pips, that's it, get out. You might still be able to capture some tiny bit of movement within this kind of range environment. But if you're looking at the swing style, then Aussie franc is not clear at this moment yet. Okay, it's basically anyone's best guess at this moment. Yeah, so in short, if you're looking at longer term trades, you might want to just leave it aside. But if you're looking at short term, then you need to probably go down to like 30-minute, 15-minute to look out for opportunity. Okay. Yeah. So then that you probably need an intraday strategy to execute trades. Okay. Great. So Adrian here is asking about some of the pairs. I think we talked about it, right? Aussie franc, pound odd. Pound Kiwi probably gonna be very very similar to Pound Odd as well. Both of them are correlated in a way. It's slightly different, right? Pound Australia kind of break the high, but Pound New Zealand has yet to do that. Okay, Pound New Zealand, I would say there's still this structure that is in play, right? Basically, this one here, if you take a look at it. So daily side is still showing there's a good chance of a move to the downside. On the 4-hour chart, this kind of setup honestly is very very choppy. But if you are someone who is familiar with harmonic patterns, okay, then you have a very very solid harmonic pattern that's setting up here. Okay, it's probably gonna be like a bad pattern. Okay, so something like that. Right? If you understand what harmonic is, right? So the idea then is if you're into this, you can look out for an opportunity to maybe short it somewhere at 1.9920 around there. Okay, so wait for the completion of this bat. You'll be able to short it. Okay. Of course, there are many ways to execute, right? This is just showing you one potential setup, which is what we call harmonic entry execution. Okay, so I would say, yeah, you can focus on the downside. Okay. I mean, this right now is not clear, but it depends on how it developed. You might see a flag as well for downside. Overall, if I were to focus on the direction on pound kiwi right now, I would choose to focus on the sell. Okay, so you might want to then look out for opportunity to maybe allow you and give you a valid sell setup to execute the sell trade. Yeah, good. Okay. So let me see. Okay, so I see Chua here is asking, even with FOMC around the corner, can we still trade? Yeah, I mean, yes, right. For me, I don't avoid trading because there's a major news like FOMC, but I would say it's more of like you want to be aware that that news, that event can create some volatility in the market. Okay, and when I mean volatility, it can go both sides, right? It can be good for your position, and of course, it can be like bad for your position. We'll never know. Okay? No trader will know. But what we can do is we can prepare ourselves, right? Understand the downside, understand the upside, and you can't be afraid of news events, right? Because if every event you're gonna be afraid and skip trading, then you won't be able to write off some nice move, okay? Because some of the nicest and clearest move happens when the event is being released, okay? So for me, I don't really kind of like stop trading because of that, but I will be maybe a little bit cautious, right? You can do it in terms of position sizing. You can do it with maybe timing your entry, okay? But for me, I'll still trade, right? Great. So I see here, Huminski asked, did you change your opinion that S&P 500 won't crash until March, June 2020? Okay, first off, to maybe correct a little bit on that, I've never say that the S&P will crash in March and June. I would say right now the liquidity environment is still rather bullish for the stock side of things, okay? And that means that generally the market are still going to be supportive to the upside, right? So things can change, right? We always say what I can share with you is based on what we have right now, okay? And right now is still the same, okay? Market are generally still bullish, but when the FOMC statement release, we won't know what is going to be released. So you need to definitely then keep track. When Thursday the FOMC statement comes out, things might change, right? And that's the part where maybe you might see Q4 this year, the market starts coming down, right? Depending on what the statement is. So this part here is where you need to know when I say that the market is generally bullish all the way until next year, June, which is 2022. Okay, the part is where we are basing on what we have right now. Okay, so this coming Thursday, when we have a new set of data, we definitely need to reassess the entire situation. Okay, but until then, the whole market environment is still telling us it's bullish now. Okay, so take note of that, right? So it does not mean that, again, it does not mean that next year is gonna crash, right? It's more of like right now is still being supportive to the upside. So if you're looking at stocks, you are still okay to trade it. But when this upcoming FOMC is released, you want to keep track and update this entire analysis again. Okay, so hope that's clear. Yeah. So that's the part on that. Good. So I see another question here is, what is the difference from FOMC last month and this month? Jimmy, I won't know now, okay, because this month one is not released yet. But when it's being released, then you want to do that comparison, right? Okay, what's the difference? Because this month is not out yet, so we won't know what's the difference until Thursday. Okay, good. Yeah, so good. Andy here says Chinese stocks like shit. Yeah, I mean, because last year China actually rallied, right? Okay, if you take a look at that, right, the media are always slower in reporting, right? You look at 2020, okay, even if you don't take the bottom here, right, let's take somewhere at this top here all the way here, that's a 50% rally last year, okay, same like Katie Wood, Ark Invest, right, huge rally last year, and then what happened is the media pick this up because that's a massive return, right? The S&P average out like what 10+%. This is like 4 times of it. Definitely the media will pick it up, right? And what happens is that the media starts reporting about it, and by the time you see the media, you're probably somewhere here, okay? And I always say this: when you see something in the media, be it social media, be it articles, be it news, it's done, okay? It's reported, it's not a forecast. So don't make a decision for your trading and investment when you see that piece of information, because it's already done, okay? Same thing, okay? If you look not only the stock market, but if you look at like gold, if you still remember, right? This move up in 2020, huge, right? And then what happens at the end of 2020, there's also media that picks up and say about how precious metal like gold and silver did a major rally. And then what happened next? Okay, the market does a correction. Okay. So every time you see a media that's reported, it's already done. So don't jump into that trade when you see it on social media. Okay, what you want to do is you want to go in before that even happened. Okay, and that's where you need to have the ability to do what we call forecasting, right? Do some preemptive prep and trade it before the entire move happens. Yeah. Good. Okay, so great. So I'm seeing you guys are saying that the dollar is already moving. Okay. But just be cautious. Don't get sucked in right now. Yes, this is definitely moving, okay, but don't get sucked in right now because I can tell you easily it can come here and then comes back down. Okay, so just be aware, okay. Monday move, which is where we are right now. Monday market are usually fakes. Okay, it's not all the time fake, but most of the time is fake. Okay, when I mean fake means it likes to fake you. I'm not surprised if tomorrow you come back in, pound dollar is back here. Okay. Sometimes it does give us a very clean break, but most of the time, I would say maybe a good 70-80% of the time is fake and it's gonna come back. Okay. So yeah, just be aware of that, right? So I'm not too eager to jump into the market on Monday. Yeah, so that's the idea. Good. Okay, yeah, so same thing of EU, right? So EU is also starting to move back. Just be aware, when you have a major event like FOMC on Thursday, the market are usually just gonna range all the way until Thursday, right? Unlikely you're gonna see a major move before that event, because put yourself in the perspective of today, if you're managing like a professional trader, or you're managing a huge amount of funds, and you know that there's a very important piece of information that's coming out on Thursday, you would not take a big position now, right? You would probably want to wait until Thursday, and when that news release, that's where you make a decision, right? So same thing, how you're gonna see that, or what that's gonna reflect on the chart is you're gonna see a range all the way until Thursday, okay, and then you probably get that volatility kicks in, that breakout that happens on Thursday. Okay, so just be patient on that. Okay, good. Okay, yeah, right. So Randy says, now Bitcoin has a lot of good news, reporting and things like that. Yep. All right. Just if today you can take away this kind of like insights, right? This sharing here where I mentioned, if you see something on the news, social media, your friends start sharing, you want to be a little bit careful, okay? Like for example, Bitcoin right now is definitely the hype. what's gonna happen is this is likely gonna just consolidate first, right? And then maybe it might continue to the upside. So you do not want to jump in now, right? Because this can easily come back down. This can just do a consolidation. You want to again have a strategy, or I would say a way, a method that allows you to time your trade a little bit better. Okay, and definitely you do not want to follow the news. Okay, that's something you definitely do not want to do. Yeah, so that's important. um Great. Hey, I see one question here asking what about dollar index? What is the dollar against? Now, you need to understand that dollar index is actually a basket of currencies, right? You have euro against the dollar inside this basket. You have pound, you have yen, you have Aussie. You also have some other currencies. I think if I'm not wrong. In total, you have 6 currencies inside this basket. Okay, of course, their weightage are different. So what you can then see is like dollar index are basically at the end of the day tracking dollar as a whole. Okay, but within it is a basket of it. Okay, and euro dollar is the highest weightage among it, right? So yeah, if you're looking at dollar index chart, at the end of the day, you're looking at dollar itself. Okay, so hope that's clear. Okay, so great. Yeah, so we are seeing the dollar weakness happening right now, but just again, don't be, don't get sucked in. Okay, don't get FOMO. Just be patient. Okay, before you jump in. Okay. Yeah. Ideally, you want to either see this a clean break and then maybe a consolidation here. Okay, or from here it can still continue to do its consolidation, right? So in any case, my idea, or I would say my suggestion over here, is just wait until closer to FOMC, then only you come and look at the dollar. Okay, because from now until then, likely you're gonna see quite a bit of just bouncing up and down along the way. Yeah, so hopefully that helps. Great. Okay, so that's all I see from the questions that we have. Okay, so great. I hope today's session here is able to help you a little bit here and there. Okay, if you do, right, feel free to share this out with your friends. Invite them to join in. Okay, we do this every Monday for English, and then on Thursday we do a sharing on Chinese Mandarin, right? The how we run it is more or less similar. Okay, we look at the market and then we see some of the questions you guys have. Then we just talk about the market as a whole. Okay, yeah. So that's all for me. All the best for you guys this week, and we'll see you guys next Monday again, right?